Hello traders, this is the midweek market focus of the 27th of June. My name is Julio Piñeiro. I'm going to be doing this midweek once again. Right, let's get started. I'm going to scan the market looking for opportunities on FX, and then we're going to move on to stocks. Right, I'm going to have a quick look at commodities such as gold and silver, and then a quick look at the FTSE 100 as well, the index, the FTSE 100, which is going to come up as UK 100 on your ETX platform. Right. Let me show you. It's this one here. This is the FTSE 100. It will say UK 100 daily rolling. It's the best 100 companies in the UK, and it's just one pip commission. The FTSE opens at 8 o'clock in the morning, and it closes at 4:30 in the afternoon. And some indices, UK indices, there it is. Make sure you pick the daily rolling, always, yeah? Forget the future contracts. Forget those ones there. And that one as well, just this one here. UK 100 daily rolling. Okay? Cool. And if you click there, it will say add to watch list. As you click there, it's going to be on your watch list. And this is my watch list. Okay, this is what I'm looking at. Dow Jones, Singapore, Swiss CAD, the FTSE, silver, Kiwi, gold, cable, euro dollar, euro yen, euro sterling, euro Swiss, and Swiss yen. Actually, I've got a few more here at the top. Aussie and Aussie Kiwi. Right, this is what I'm looking at myself. Rather than scanning through the whole list, looking for opportunities and looking for your trade, really, because by the time you find this, it's probably gone, really. So having a watch list helps tremendously. Cool. Let's put this aside. Right, now I use 4 different charts. This is a daily chart, D. This is a 4-hourly time frame, yeah, or 240 minutes. This is a 60-minute or the hourly chart, and a 5-minute time frame. It's a time frame for execution, for snipers and pivots, pivot bounces and pivot breaks as well. So we look at the big picture on the daily time frame, and then we move on to the 4-hourly. Look for confluence of levels, look at the swings, channels, support and resistance. Same thing as we were looking on the daily chart, pretty much. And then we move on to the 60-minute and look for high test bars, low test bars. It's like zooming in and out, isn't it? It's the same currency pair. And the 60-minute is going to offer you a better understanding of the intraday activity in the market. The 5-minute time frame is very noisy. That's why you have to synchronize it, or you need to find an agreement, good relationship from the 60-minute to the 5-minute time frame. If phase 1 is kicking in on the 60-minute, then on the 5-minute it's going to start cycling downwards, right? As price action is overstretched on the 60-minute, we know that phase 1 is going to be coming up very shortly, and it's going to be pulling back up. If on the 60 minutes pulling back up, obviously on the 5-minute it's just going to go quite aggressively. Right? Go. Now, euro dollar daily time frame, this one we use for the big picture. Open it up. There we go. Had a massive sell-off. Then it pull back up, and it's pretty much bouncing off the 50 MA. And that was a good short, selling opportunity down here. This is not quite a doji bar, because doji bar is it's like a cross, really. It's not quite like a doji bar, but it's representing indecision in the market, especially after having an inside bar. The stop loss goes a few pips above the highs. If your risk management technique allows you to put it above the 50 MA, happy days. Then put it above the happy days, which is on a much safer place to allocate your stop loss. Your entry point goes down here, a few pips below the order bar, and there are different ways of trading this particular trade. You can wait for 2 consecutive seller bars or 2 seller bars, and you put the stop loss at 1 pip below the second seller bar, and then you just trade it. This is a good target. It's a good target to be looking at. This one down here. I wouldn't put it down there. I would put it just above these closing and openings there, just in case price action comes back down, test the level and shoots up. Okay, and it makes a double bottom or whatever it is. So it's much safer to put it here, down there. Although it depends. If you wanna hold it big time, you can just you can even target previous swing lows as well, historical lows. Those boys down there, right? Which fundamentally is gonna get down there, right? Obviously, we all know what is happening in the eurozone. I wouldn't be surprised if it reaches the 119 level. I wouldn't be surprised at all. Okay, let's open it up a little bit so that we can see. This is more end of day technique, pretty advanced technique, end of day setup. Just for those of you who are trading inside bars and reversal patterns as well. Look at the RSI, it's hooking down from there, and stochastic as well, was hooking down there as well. Okay, cool. It is below the 50 MA, so that's a good signal for sniper short. It's also below the 50 MA on the 4-hourly chart, and we have some channels. We had a channel pushing downwards, which got broken, and another channel pushing upwards, which got broken as well. Now it is making lower highs and lower lows, pushing down, fine. It is below the 50 MA, that's all we're looking at. Below the 50 MA, the red line, this one here, the 50 exponential moving average, is the average data of the past 50 days in the market. Okay, same thing for the 20 EMA and same thing for the 200 EMA. The 20 EMA is closer to the price action, followed by the 50 and followed by the 200. 60 minute. 60 minute, I love the 60 minute myself. I look for high test bars and low test bars. It's very, very powerful for price rejection. Like this one here, it's a massive high test bar, so it goes down. Another high test bar, so it goes down. And it's bouncing off the pivot point as well. And it is making lower highs and lower lows, which in fact I took it short here, as it broke through the low of the bar. Okay? And we had a massive sell-off. I think my target was like somewhere here. I was targeting this level down here. Right? We have a triple top there as well. For those of you who are trading double tops and triple tops and double bottoms and triple bottoms. Price action is struggling to break through, cannot break through, price rejection, high test bar. It puts a lower high, very powerful lower high, massive high test, bouncing off the pivot point. This low took these funny lows out, not this massive spike, but if you look at this scenario, it is pushing down, right? And also we have a beautiful head and shoulders pattern as well. That's one of the shoulders, that's the head, and that's another shoulder. Myself, I don't entirely rely on head and shoulder patterns. Some people, they come to you and they're like, oh, there is a head and shoulder pattern, and you see like 3 heads and 2 shoulders each side, and you're like, right, okay. So that's one of the reasons that which I'm not very keen on trading head and shoulders, really. I do like double tops and double bottoms. All right, I do like price rejection. It's a good reversal signal. Although I'm gonna draw some lines in here so that you guys see more clearly. There and There we go. Beautiful head and shoulders. Right? It's never going to be perfect, yeah? You're always going to get some spikes here and there. One shoulder, the head, and the other shoulder. Triple top. First, lower, high, as it breaks the neckline. That is shot from there. If you take it as a head and shoulder pattern, you have to wait until it breaks this neck. If you trade in this high test bar off a level, the entry is a few pips below the lower bar. The difference is not massive. The difference is just a few pips. 5 pips is pretty much the same entry, really. Pretty much. Right, beautiful pattern. There we go. Now, it is pushing down. Fine. Now, is it making lower highs and lower lows? Well, it is making lower highs, but it's not making lower lows. Right. So the shot momentum is not very powerful until this low is broken. Okay. This is seller bar followed by a buyer bar and another seller bar bouncing off the pivot point. We go to the 5-minute time frame. That was a good opportunity to sell. There we go. Pivot short there. It was making lower highs and lower lows, pushing down, retest of the pivot, shot from there. Could have been a sniper shot there as well, isn't it? Although the entry for a sniper shot, as we know, is always on the 50 EMA, as it touches the 50 EMA. The stop loss goes 20 pips above that, and the target goes 20 pips below that. For a pivot shot, we always enter on the pivot itself. And the level is 1.2512. There. And the level for a sniper shot would have been 1.2502. So we can see there's a bit of a difference there. Right. For a sniper shot, it was a pretty good trade. It's going to hit the target as it goes down 20 pips. Okay, that was the entry there. 20 pips is somewhere there. It is 20 pips there. So when it reaches your 20 pips, you're going to come out and you're going to have 1% more on your account. Obviously, if you risk managing accordingly, never risk more than 1%. And right, why it was a good trade? Okay, it was all red, which means it was below, the price action was below the 50 MA in the 4 time frames, and as it touches the 50 MA we sell. Linear regression was pushing down. It was making lower highs and lower lows. That's why it was pushing down, and a beautiful retest there as well. That's enough. Okay, enough reasons to take it short. Cool. Let's move on. Cable. So pricing enough. Cable is pushing up today, and the euro seems to be pushing down, and they're highly correlated. Not today. Euro looks more bearish than cable today. If you open up the daily chart for the big picture, and let's see if we have any Fibonacci level. It's all spot on there. 50% rejection level. Fib level, very powerful. There it is. If you get a swing high and swing low, and we're trying to spot where the turning point is going to be. So if you get a swing high and swing low, draw the fib level, price action retraced 50% of the move. That's what it means. That's all what it means. Okay. Swing high and swing low. Yeah, spot on there, yeah? There it is. If we get the previous swing high, bring it back down to the swing low, to the pip, we can see that the 618 is there as well. The 618 is the most powerful level on Fibonacci levels. It's known as the 62 magic rejection level. And all very powerful. 618 is very, very powerful. Let's double check that. Yeah, spot on. Yeah, that's fine. There it is. Cool. Alright, now let's go back in time. Let's see what's going on this level here. Is there anything going on? Yes, there's some touches here and there. 1, 2, 3, 4, 5 touches. Whoa, happy days, another touch there. And yeah, enough. If we get 3 touches, we can draw a line anywhere. Alright, minimum 3 touches. Cable is pushing up quite aggressively today. Let's take all these Fibonacci levels out. And open it up. Look at this turning point in the market. Was hooking down, shot from there. It was the same trade as the one on Euro, wasn't it? And there it is. I was hooking down there as well. And the MACD was on a short momentum there. It was pushing down there as well. Cool. Let's see. Below, above, nothing there. Nothing there for snipers. Japanese yen. Let's see what's happening on Japanese yen. Price action is below on the daily. It broke through this beautiful channel that we had. Massive channel. Which got broken. It's pushing down quite aggressively. It's also below the 50 MA on the 4-hourly chart. On the 60-minute, as I said before, high test bars and low test bars are very, very powerful. Look at this high test bar. Look what happens after. It goes down. So price action opens here, goes up. This price here gets rejected. Sellers kicks in the market, pushes the price action back down and closes there. Consequently, it goes down. Down here we have 2 beautiful low test bars. Price rejection once again opens here, goes back down. This level here gets rejected, whichever number was 79.20, 82. Actually 79.22. For all the yen pairs, we look at the first and second decimal points. For all the yen pairs. For all the other currency pairs, we use the third and fourth decimal point. That's very important. Okay, we have 2 seller bars. 2 seller bars followed by 2 low test bars. Consequently, price action is going to be pushing up. That's what normally happens. High test bar goes down, low test bar goes up. Especially after 2 consecutive low test bars. Okay, don't worry about the color, it doesn't matter. The tail has to be 3 times bigger than this bit here. Okay, the tail is 3 times bigger than this bit here. At least 3 times bigger. So that we can call it a low test bar. And also, look at phase 1, phase 2, phase 1 of this level, phase 2 against the trend, high test bar of this level once again. Goes back down, look, phase 1, and now we're expecting phase 2. We're expecting phase 2 to kick in. There. At least up to the 20 EMA. Let's see. We might have a few more snipers before it goes. Let's see. We'll go to the 5-minute time frame. So that's why I wouldn't take this sniper here, because first of all, this low didn't take this low out. Okay, it's like a double bottom formation. Double bottom formation is a reversal. It's a reversal pattern. Okay, it's a reversal pattern. So watch out with those. Okay, I cannot see anyone there, but I'm gonna look for some double bottoms later on. Right, we'll ignore that. It might go. Of course it might go, but because it is a game of probabilities, you're gonna have the odds in your favor. Alright? So you have to play safe. The safer, the better. Right. So I will ignore that myself, even if it goes. because the 5-minute time frame is driven by the 60-minute time frame. It's more powerful. It's leading. It's leading the move on the 5 minutes. Same as this is more powerful than this one here, and the daily chart is obviously more powerful, and the weekly chart, of course, is more powerful than the daily. Okay, that's why we have to start by checking what's happening on the daily chart for the big picture for intraday trading, and then we break it down in time frames. If you are end of day traders, don't forget to become friends with the weekly chart. Okay, weekly chart is very important for end of day trading. Also have a quick look at the monthly chart as well, and the 4-hourly chart. All right. So if you're an end of day trader, look at the daily and then go one up and one down. So up to the weekly chart and down to the 4-hourly time frame. All right. Cool. Let's move on. Swissy does exactly the opposite as Euro. We can see here that it bounced off the 50 MA after a massive upward move, pulled back down massively, and is bouncing. Well, it bounced off the 50 MA even though it didn't touch. All right. Cool. Same as Euro. Look at that massive sell-off, and it bounced on the 50 MA. I mean, it didn't touch that. Can be considered as a bounce. Okay. Cool. Go back to Swissy. I think we spent enough time looking at Euro. And we have to scan through the market. So let's see what's happening on Swissy. It's pushing up, which means Euro is pushing down. So it makes sense. Okay. It does make sense. It's going to be pushing up. Okay. And it's above the 50 MA on the daily chart, above the 50 MA on the 4-hourly chart. We have a beautiful change in sentiment. You can even draw some channels. It's not the cleanest channel ever, but that's the closest it can get. Let's see if we have any channel pushing up on. Yeah, well, not really, but possibly there. Here. Okay. Right. There's a bit of a divergence formation here. This pushing up and this pushing down, so it goes down a little bit. Now it's pulling back up again. And we go to the 60-minute time frame. As I said before, 60-minute time frame is very good for high test bars, low test bars. Also, it's very good for phase 1, phase 2, cyclicity, clean bounces of EMAs, double tops, double bottoms. Right, let's see what's happening. I would rather wait until it takes out this high, pulls back down, give me an opportunity here to take it long. Okay, because so far he's definitely struggling to break through. That's what's happening here. We go to the 60-minute, to the 5-minute time frame. It's a bit choppy. I'll ignore it. Although that was the first clean buying opportunity here, bouncing off the pivot point. I wouldn't have bothered to put a stop loss down here where the S1 is. I would have placed it there. All right. Yeah. You can risk 0.7% of your account, 0.6% of your account. We're just risking 21 pips. So we need, well, you can put 1% on 21 pips, which means we need 21 pips to get 1%. There we go, hit the target. Pivot bounce, same as the pivot bounce short that we had on Euro. Obviously, because they do exactly the opposite thing. There we go. In fact, this is much cleaner. I like to say, yeah. And it offers a much better reward to risk ratio as well. Well, 20 pips, I can put 19 pips there. There, 19 pips. So we need 19 pips to get 1%, easy peasy. There. Okay, that was a good trading call there. When we started the webinar, price action was like somewhere here or somewhere here, I think it was, and it's now going. It's now going, isn't it? That was a sniper there and there. Both good calls, as we covered earlier on. Right, let's go to Kiwi. I said I was going to show you a clean double bottom formation, and there it is. Massive sell-off, put some low there, goes back up, and is testing the same level, and this is a double bottom formation, reversal pattern. Consequently, shoots up, and look at that. Low test bar goes up, low test bar goes up. Remember? High test bar, a tricky one, goes down and it shoots up. But if you get low test bars off levels, they're much more powerful than having a low test bar and a high test bar in the middle of nowhere. Okay, let's see how powerful this level is. Touch, touch, and we have several touches back in time as well. Okay, it's been respecting the level since 2005. For those of you who haven't seen it, touch there, and a touch there. March 2005. It's been respecting the level for 7 years now. So when the price action reaches this level, we're expecting a bounce of it or a breakout. Either two. There are no more options. Either a bounce of it or a breakout. The likelihood of having a bounce of this level is massive, right? Especially when you get a double bottom there formation after a rejection of price indicated by a low test bar. Cool. Right, this is a flip, breaks through, comes back down, and it's going up now. This is a 50 flip. It's respecting the EMA going downwards, breaks through, and now it's respecting the EMA going upwards. 50 flip formation. And this is a channel. There's a false breakout, gets into a channel, breaks to the downside. Okay. Cool. Above, fine. And we have some snipers. First sniper that would have taken myself, that one there. Why? Making high highs and high lows, linear aggression pushing up, all green, good to buy there. 20 pips stop loss, 20 pips target. 20 and 20, yeah? There, roughly speaking. Cool. Right. Are we going to take that one there? No. It is flat. Okay? We'll ignore that. Make sure it's pushing up before you take it. Okay? We're focusing on quality over quantity. Of course, we're going to have so many different triggers here and there, but we're going to pick the best ones. The ones that make us money. That's what we're here for. Right? Next one. Canadian. Let's see what's happening on Canadian. I have some descending triangle, so choppy, broke through the parity level like a month ago. That's the parity level, 1.00000. Okay, this one here, there. So $1 equals $1 Canadian dollar. Now, because the US dollar is the base, and the US dollar is slightly stronger than the Canadian dollar. Not much. It's 1.0258, alright, it's slightly stronger. Okay. Right, what's happening here? It's overstretched from the MA, so it pulls back down, testing the 50 MA, goes back up. Right. And it's pulling back down a little bit now. It's on the 20 MA now. Go to the 4-hourly chart. Oh, I love these patterns here. Right, okay. I took this trade yesterday. I'm gonna go through this trade with you guys. I want to share it with you as I like it quite a lot. Okay, let's draw a channel first of all. Let's make it more precise. There. Minimum 3 touches, alright? 1, 2, 3, 4, 5, 6, 6 touches, that's enough. Cool. Now, what's happening here? 50 flip. Remember the 50 flip? Respecting the EMA going downwards, breaks through, comes back down, yeah, breaks through, puts a high, massive high there, comes back down, puts a higher low, and is bouncing on the 50 EMA. So he's respecting the 50 EMA, but the other side now, yeah? Respecting the EMA going downwards, and now it's respecting the EMA going upwards. Next swing high takes the previous swing high out, and there it is now. He's testing the 50 EMA. He cannot take this low out. If he takes this low out, then he gets invalidated. He has to bounce off this level and take this high out for it to be a decent 50 flip turning point, changing sentiment, changing direction from buyers to sellers or from sellers to buyers. That's what we're looking for. There. Okay. I took it long as it broke through the pivot. There. So it tested the 50 EMA. I was expecting a 50 flip, first bounce. I took it long here. And I took my money there. Somewhere here. At the top. There. Right? It was around 40 pips. Yeah. 45 pips. There it is. Okay. Stop loss was quite tight. Was 20 pips. There. Below this low. Below the 50 MA. The 20 MA. Yeah. Just down here. There. 1.0232. And on the 60 minute. Yeah. That was the bounce. Yeah, that was the entry down here. Although I entered on the Foley chart. Okay, cool. Now next one, Aussie. There's a beautiful income generator setting up on Aussie. Okay, there's nothing there. It looks very similar to Kiwi, anyways. Let me just go. Well, let's just finish off with Euro Sterling and Euro Yen, and then we're gonna move on to income generators for a sec before we go into stocks. And as I said before, Euro looks more bearish than cable. That's why Euro Sterling is pushing down. There we go. Quite aggressively. Look at the high test bars. Yeah. Pushes back down. We have two seller bars following each other. It's testing this level down here. Let's see what happens there. It's on a critical point. We'll see. Let's see if it's going to break through this level or if it's going to bounce off it. Sometimes when it reaches these lows, it normally bounces off it. It goes back and tests some EMAs, and then it goes. Euro Yen. Beautiful trade there on the daily chart. For those of you who are trading end of day techniques, there, short from there, stop loss here, and there we go. Pushing down. Alright, stochastic, divergence. He's pushing up, he's pushing down. On RSI, we have no divergence, but we do have divergence on stochastic, you see? That's why you have to use quite a few of them. I use these three, mostly. MACD, RSI, and stochastic. The settings for stochastic is 833 or 533. Settings for RSI is 6. Then upper band and lower band for both of them are 70 and 30. Alright, that was Euro Yen. Let's have a quick look at the FTSE 100. What's the FTSE doing? Came back up and tested the 200 EMA. came back down and bounced off this level here. Forward chart, let's see what's happening. Pushing down from there. Not very clean. Not very clean at all. See that? Double bottom formation. So it goes up, yeah. Plus we have divergence here as well. Make sure you pick the rare points. Don't get confused. Don't pick these two and these two. Make sure you pick the same level. It's actually this peak and this peak. Okay? So it's like this. Because it's very easy to get confused and pick these two and then those two. Right? You have to be perfectly aligned. There and there. If you're gonna make it even easier, put a line there, a line here, and a line there, and a line there. Yeah, vertical line. There it is. Vertical line. Put a line here, line there, line there, and there, and then just put a line. Just draw a line, connecting the peaks of the troughs. Right there and there. Look what happens after. Well, we have a lower low, double bottom, and it goes up from there. Cool. Let's have a quick look at gold. The 1530 level is a good level to buy, to go long on gold. There it is. It's a very powerful level. Got a touch here and a touch there. Horizontal levels are very powerful in anything you're trading. Commodities, indices, stocks, FX, doesn't matter. Make sure you put your levels on your chart. What do I mean with levels? Alright, horizontals are support and resistance. But not only that, you also have to draw your channels as well. Your trend lines. Minimum 3 touches. And put all your levels in there. And then that is gonna help tremendously. It's gonna help a lot because well, make sure you save the line. So you go page, save page. So next time you reopen your pages, you're gonna see straight away what's happening, right? Because we have all your levels on it. All right. Silver looks quite interesting. Look at this level down here. Yeah? Touch, 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 and touch. Every time it touches the level, it shoots up. Yeah, look at that. Another touch there as well. It touches, goes up. It touches, goes up. It touches, goes up. It touched yesterday, 2 days ago, and 3 days ago, and it's going up. Some people, they will actually take it long there on the level itself, which is a very aggressive entry, and the stop loss just below. Although the stop loss, due to this funny spike and this massive price rejection, key reversal, the stop loss has to be down there, which is massive. Okay, it's not a cheap stop loss, not at all. Although the likelihood of bouncing at this level is quite big. So yeah, I mean, it's personal preference. Personal preference which entry you're gonna pick. You have to see what sort of person you are, what sort of character you have, and not only on trading but in everything in life. If you're an aggressive person, you're a conservative person, if you like risk, if you don't like risk, and if you're an aggressive person, you enter down here. If you're a conservative person, conservative trader, you enter here. Sorry for the aggressive person, it could be a bit misleading. Let's say aggressive trader, all right, to avoid any misunderstanding. Yeah, the entry for a conservative trader will be as it takes out the high of this doji bar. By the way, this is a doji bar. This bar here. Beautiful doji bar. Indecision in the market. Alpha level. Powerful. Very powerful. RSI. Pushing up. Hooking up. Yeah. That hooking up. Fine. Pointing up. Cool. Alright. And it's not going. You can pull back down to here. Give you another entry there. And they go from there. Although if that happens, we have more chances to have a breakout. It's better the first time. That's a personal preference. Once again, platinum shooting down. All right, this is platinum. Let's see what's happening on platinum. Got a bit of a level there. It's not very clean, I would say. Not very. Got a level there. Not the cleanest level ever. But is something there. Alright. I'll leave that alone for the time being. Cool, let's move on to stocks. Right, I've got some nice stocks for you guys. Oh, by the way, look at this 50 flip once again. Respecting the EMA going downwards, breakthrough, and now it's respecting the EMA going upwards. Low test bar, bouncing off the 20 and the 50. That's not bad at all. Let's see if you have any flip level. Swing high, swing low, 618, rejection to the pip, there. Remember, the 62 magic rejection level, there it is. Beautiful. Next one. 50 feet level. Is it? No, sorry, the 78 rejection level there. Okay, so we have some flip levels there. Cool. This is Lloyd's Banking Group, by the way. Okay, I've got some stocks written down here on my watch list. H dot hyphen LON. Let's look for opportunities. Because without a dot, possibly, is it? Oh, there it is. Sorry, it was without the dot. It's HOIL-LON. You can just type it straight away. You can just type it and click enter. Right. Okay, let's see what's happening here. From Heritage Oil. Let's make the chart a bit smaller. And as we know, we always start by the big picture, daily chart. We have a very, very interesting level down here. There. Let's make it bigger once again. It's a beautiful selling opportunity. And it was, look at that, respecting the 50 MA nicely. Small little reversal bar, key reversal, and that's the point. That's the point I want to make. Support is becoming resistance. Okay, support becoming resistance. So it cannot break through, goes back up, test the 50 MA, breakthrough, and then it's testing the level, bouncing off the 50 MA, pushing down massively. I'll be looking to kill the trader, to be honest, before it reverses. Alright, because he's struggling to break through there again. He might break through, might not, but that will do. but you can always hold it as well. These sort of patterns very powerful. Support becoming resistance and resistance becoming support. These are just levels. They're just levels, horizontal levels. Very powerful. And a short rally, aren't we? Yeah. And a beautiful descending triangle as well. Make it a bit tighter. That's better. Descending triangle. Okay. Might pull back up to the 50 MA on the top of the triangle before it goes. So again, it's a personal preference to close it there or to hold the heat. All right. I'm not very keen on. I'm an intraday trader myself. I don't normally hold positions for too long. Okay. Although there are more emotions if you're an intraday trader, there are more emotions, much more emotions, and you have to be free of emotions. And then fear and greed plays an important role in intraday trading. Also on end of day trading as well. It's all psychology. It's all in your mind. Your mindset has to be ready. Psychology is very important as well. Psychology of trading. Books and books about psychology of trading. Alright, let's go to the next one. QQ dot dash LON. Enter. We have a level up here. Bit of a channel formation. Yeah, we have a power play setting up there, and it's better if you have a trigger down here because we're not gonna enter there to go up to here. That's the point I wanted to make. It's better if it pulls back down nicely, and then from there we take it long. And the target will be up here. For power plays we don't have targets, but in this particular case, the target will be up here in this sort of scenario. Massive channel. The likelihood of going back up to this level once again is massive. It's like a magnet. It's gonna test the level before it breaks through or tanks from there. So it will definitely have an interaction with the level. Okay, cool. Rolls Royce RR dot dash LON. Let's see what's happening to Rolls Royce. Look at that, it gapped there massively. We have a beautiful channel pushing up there. We have some levels here. Okay, remember, so resistance becoming support now. Yeah, resistance. Look at that, breakthrough is acting as a support now, and support and support and support, and it goes up to the resistance, and then yeah, and then it's giving you an entry there. Although the entry is on this bar, we're not going to take it long here, right? You want to wait until it pulls back down, and then it goes. We have a low test bar bouncing off the 20 MA, right? And it's now chilling a little bit. So yeah, something that keep an eye on. Let's go to the next one. OPHR-LON. Okay, let's take this level out. Let's draw the channels. Always, yeah, look at that. Spot on. And then let's put some support and resistance, yeah? Just one here, one there, one there, one there, sorry, one there, and one there, yeah? That's enough. Put 4 or 5 lines on your chart, yeah? 1, 2, 3, 4, 5, and the channel. That's good enough. Now let's make it bigger. Let's see what's happening. Okay. is respecting the channel and is making higher highs and higher lows all the way. There's some opportunities there. Okay, so keep an eye on this particular stock, which is trading quite nicely for the past. It's been trading quite nicely for the past 6 months or so, even 6 months, yeah. And yeah, it's something there to look at as well. All right. The smaller the setup bar, the better it is. So the bar with the arrow, the smaller, the better. That means that the risk is going to be tighter. All right. So yeah, something there to look at as well. Let's go to the next one. ITRK-LON. There we go. Intertech Group. It's not as clean as the other one, is it? Not at all. Okay, but it is making high highs and high lows, and it's bouncing off the 50 EMA and the bottom B of the channel as well. After a massive phase 2, we're expecting a massive phase 1, don't we? So keep an eye on this scenario as well. Alright, next one, BAD-LON. Same thing there. Massive, beautiful channel, making high highs and high lows non-stop, and giving you so many entries. And I would rather wait until we get the entry like even lower, to be honest. I wouldn't be very keen on going long there halfway through the channel on the stop loss there, not at all. I'd like to see another seller bar at least, giving me an entry somewhere down there. Okay, somewhere down there. Yeah, let's assume we have another seller bar, or even better if we have a low test bar and it's going to be touching the 50 MA like that. It's going to be doing something like that. Pressing it off. Okay, I've drawn an extra line there, so that's what I'll be expecting. And if it's a massive low test bar, even better. So I want the opening and close at the top. And I don't want a massive bar, I want a small bar, because that means that the risk is going to be tighter as well. Enter there, stop loss there, let it run. Alright? Yeah, that's the channel that we have. So the likelihood of continuing within the channel is quite tremendous, I would say. Remember, the trend is your friend until it bends to an end. Follow the trend, follow the channel. Once the channel has been established, it's very difficult to change it. Just carry on looking for continuation patterns within the channel. Once it's broken, look for other channels, look for other trades out there. Alright, that was the last one that I had on my watch list. Thank you very much for listening, and keep up the good work and book your coaching sessions. All the best. Cheers. Bye now.